you're planning on selling your home this year, you'll want to pay close attention. Hi, I'm Lambros Demos from Royal LePage, and this is Live at Lunch. Thank you so much for joining me. Wow. So, if you haven't noticed, real estate activity has taken a hit this year. And actually, the spring market is MIA, as it is mentioned in my title here. Um, Actually, it's probably the lowest activity we've seen for spring since a Canadian team has last won the Stanley Cup. No joke. It's been about 30 plus years for that. So, um, not sure what's happening. There's a lot of economic uncertainty out there, and we're going to get into that in a minute. But like I said, it's been a long time since we've seen transactions this low for the spring. And spring is supposed to be the busiest time of year for real estate deals. It's just not happening this year. The consumer confidence apparently isn't there. So, I mean, buyers need to pay attention, but sellers as well need to pay attention because if you do want to get your house sold this year, you have to know what is going on here. So, like I said, 30 plus years since Canadian team last won the Stanley Cup, and we haven't seen this many deals or this low number of deals since then. So, maybe the Oilers will change everything this year. Who knows? But who's going to change real estate, right? There has been talk, from the federal government that they're bringing in incentives for home buyers. They're talking about, building more affordable homes, et cetera. And speaking of affordability, I mean, that's certainly one of the issues. And the Toronto Regional Real Estate Board released their stats earlier this week, and they put their positive spin on this, as they always do, talking about home affordability. So I'm just going to read briefly a quote here. It says, looking at the GTA as a whole, home buyers have certainly benefited from greater choice, which is true, and improved affordability this year. So I love how they say home prices have come down by using the term improved affordability, right? So, and again, another quote here: homeownership costs are more affordable this year compared to last, which is true, right? I mean, home prices have come down, and we'll get into that in a second. But also, the interest rates have come down as well. So all signs are favoring buyers right now, including more choice, as I touched on earlier. So this is a great time for buyers, not so great for sellers. So here are some statistics that sellers need to be aware of. Okay, so when we're looking at year-to-date home prices, the prices up until last month are about 2.3% lower average, right, all across the GTA, all property types, from the end of 2024. Okay, so they've come down already this year. From the end of 2023, they've come down about 3.3%. From the end of 2022, they've come down 8.3%. And remember, 2022 was the peak of the market, right? So that's when prices went up way too high, way too fast. And then interest rates started going up as well. And the market came down, like a barrel over the falls, right? So, something similar is happening this year with respect to home prices coming down, but not as quickly, right? So if 2022 was a stabbing, this year is more like death by a thousand paper cuts, so to speak, right? So that's what people need to be aware of. And when we go back to 2021, prices are pretty flat compared to 2021. So they're very similar to 2021 prices. So that's what you need to have in the back of your head when you're putting your house on the market. You have to understand that all the gains that we've had with respect to home values have been wiped out since 2021. Okay, so we have to go back to those home prices at that point in time. So if you want to price your home as if it was 2022, it's not going to go anywhere. As if it was 2023, also not going to go anywhere. Even 2024, you're going to have a hard time selling. It's going to gather dust on the market. So we have to look at 2021 home prices. Pretty much that's where we are at right now. Now, Where they go from here, no one knows. I expect things to continue on this path. Home sellers are being stubborn because they're refusing to drop their prices. But buyers as well are taking advantage of this type of market, so they're going in with lowball offers, and they're willing to wait. And the statistics show that they're willing to wait because the days on market have gone up as well. And if they can't go anywhere, on their first choice, they're going to look at their second choice and the third choice, because there are a number of listings on the market right now. The months of inventory has gone up, right, as well. So putting us squarely, actually deeper into a buyer's market. We were seeing signs of a buyer's market earlier this spring in March and April, and now we're squarely in a buyer's market for sure. So all these things to consider if you do want to have your home sold. Make sure that you price it correctly. Hire a real estate agent, a trusted real estate agent that can get the job done, can show you the comparables, can give you a real indication of what your home is worth, right? Not what you want, not what you think it's worth, but what it's really worth on the market. Otherwise, there's no point in putting it on the market, because all you're going to do is waste your time and be inconvenienced for no reason at all. And at the end of the day, you're going to end up hating your realtor, and they're probably going to end up hating you as well. So, and it's not going to go anywhere, right? So if you're serious about selling, you have to look at things objectively and not subjectively. So that's where we're at right now with respect to home prices, and sales for May have dropped down year over year about 13%, right? So from a year ago, this time they've dropped down about 13%, and that's the lowest in about 25 years. So since the turn of the millennium, this is where we're at right now with respect to home sales for the month of May. And May is supposed to be, as I said earlier, the peak of the market, the peak of the spring market. It's the busiest time of year. May traditionally has the most number of sales. So, but it's not happening this year. So why don't we look a little more regionally right now and take a look at some of the communities that I trade in with respect to sales activity and prices in Toronto, specifically Mississauga, Brampton, and Oakville. So when we're looking at home prices, I mentioned off the top that on average, they have come down about 2.3% since the end of 2024. However, more locally, like I said, every community is different and every region is different. So you're going to have to really look at each neighborhood sometimes as to what's happening with respect to home prices to get a better valuation for your home. I'm just giving you general numbers here. But in Toronto, they've actually gone up a little bit. Very, very small. I'm actually going to call it flat because it's less than 1% that they've gone up month over month, right? We're not talking year over year anymore. We're talking month over month. And they've gone up slightly less than 1%. So I'm just going to call it flat. In Mississauga, they've gone up about 5% month over month. And in Brampton, they've come down slightly. Actually, they've went up as well, similar to Toronto, less than 1%. In Oakville, they went up about 4.5%. But Oakville is a very small sample size, and things tend to fluctuate more in that area. So keep that in the back of your mind. I did mention things are taking longer to sell right now in Toronto. Things are taking 6 days longer to sell on the market. In Mississauga, 5 days longer to sell on the market. In Brampton, a full week longer on the market. And in Oakville, almost 2 weeks longer on the market, 13 days. With respect to supply, it's gone up 11% in Toronto. And also in Toronto, the demand has gone up about 9%. So now we're seeing supply increase more so than demand, making it more of a buyer's market here. That means increasing the months of inventory as well. In Mississauga, 17% for listings and only 4% for sales, also increasing the months of inventory, also putting it more into a buyer's market. In Brampton, up 14% for supply and only 10% for sales. Same thing. Months of inventory is going up. Buyer's market there as well. And in Oakville, the reverse. Small sample size. What do you expect here? Up 5% in supply and 38% in terms of sales. Okay, so I mean, take it with a grain of salt. We're talking small numbers here. Only 223 sales in April versus 308 sales in May. So you have to take it into context as well and not get carried away with these percentages. Okay, um, so so as we saw here, there is a slight uptick in month-over-month sales regionally, despite the average drop in year-over-year sales. Um, but also, it's not consistent with seasonal averages because usually we see a greater uptick in sales activity from March to April to May. And May, as I said, is the peak of the market with respect to sales, but it's just not going up as much as it used to in previous years in a normal year. And also, again, supply increased more than demand, which again bumps months of inventory higher and pushing us deeper into a buyer's market. Again, home prices remained relatively flat month over month. I know some little ticks up and down, but we have to look at the bigger picture here. They're not going anywhere. It's like stuck between a rock and a hard place. Sellers don't want to budge, and buyers don't want to overpay either. So there is a bit of a standoff here. Uh, Similar to what's going on with our friends down south. I'm not going to get into that, but it's curious to see who's going to win out in the end. Um, but the downward pressure on prices will certainly increase if supply continues to outpace demand. Okay, so that's something we're going to keep an eye on as well. So, and speaking of the economy, there is a lot of economic uncertainty this week, and that led to basically a no decision for the Bank of Canada. I've been getting a lot of questions about the interest rates, et cetera. So Bank of Canada earlier this week decided to keep their interest rate flat. So it's still at 2.75%, and this is the policy rate that I'm talking about. It's not the prime rate. The prime rate, you have to add 2.2% to that. So 2.75 plus 2.2 is 4.95, if my math is correct. So that is your prime rate that you're looking at, and then banks will offer you, either prime minus something or prime plus, right? So, and this only affects lines of credit and variable rate mortgages. So again, keep that in the back of your mind. It doesn't affect fixed rate mortgages. Those are based off the bond yields, but sometimes they go in tandem with the variable rate as well. But you can certainly get under 4% right now in with respect to fixed rate. Variable rate is going to be a little different for sure, and lines of credit are usually about prime minus a half, for example, right? So we're looking at 4.95%. You could probably get close to 4.5%, 4.45% for a line of credit in that respect. Excuse me. So why did the Bank of Canada decide to do this? As I mentioned off the top, mainly because of the economic uncertainty that's going on right now, especially with the trade war from the USA. We don't know what's happening with tariffs. They're changing on a daily basis. I think steel and aluminum now has gone up to 50%. It was 25%. So it's all over the place. It's just like somebody's throwing random darts on a dartboard and then deciding what number is going to come up. And not only that, how it's going to impact the economy, right? That's the biggest uncertainty here. I mean, with all this crazy tariff talk and variations, we don't know how that's going to affect the economy. So a lot of people are sitting back, waiting, finding what's happening. There's already been job losses. The unemployment rate has gone up to about 6.9%, which is probably the reason why interest rates aren't going to go up anytime soon, because the Canadian economy is certainly softer. But as Bank of Canada said, it's not sharply weaker. So those are Tiff Macklem's words from his press conference. He said the Canadian economy is softer, but not sharply weaker. So that's why they decided to stand pat and not do anything. And they're also seeing firmness in inflation data. Again, this is a quote from Tiff Macklem. So whatever that means, I guess they're seeing inflation being pretty constant. That's my interpretation of that. Um, the next report is not due out until the end of July, so July 30th. So we've got about almost 2 months before that happens. And in those 2 months, we're going to see two more inflation reports. So that may be telling as to what the next move by the Bank of Canada is going to be, whether they're going to cut rates again or not. We don't know. It's too soon to tell. Again, we have to look at what's going to happen over the next 2 months, and then they're going to decide what to do at that point in time. All right. So if there are no other questions, I will be signing off. But feel free to, excuse me, if you do have a question, by all means, you can post it below in the comments and I will get to it as soon as possible. If you'd rather send me a DM, that's fine too. But when you post it publicly, you never know who else has the same question. So you're helping others indirectly that way. Excuse me. But I'd love to hear from you. Reach out anytime. Have a great day, everybody, and stay safe. Bye-bye.